Mm-hmm. 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 Let's go.
Welcome back, traders. How are we doing? We have an absolutely gorgeous day. It's a beautiful day to be alive. And I wanted to go over AMC, GameStop, and the GME warrants today and give you a top-down informative video going over real-world events, the GameStop earnings, and the technical analysis charts. So before we start, slap the subscribe button and hit the like button because we are here every single day covering your favorite stocks. And we intend to stay around, guys. I love doing this. So if you want to see me continue to do this, join the team, jump on time, jump on board. What the hell am I even saying? All right, let's get back in to the video, right? So Trump officially declares the war has been won against Iran, or so he says. I think we're going to end it. I can't tell you for sure. And then also says Iran agrees to never pursue a nuclear weapon. President Trump says that's pretty critical for the war. I know that's the whole reason why Trump was using to actually get into Iran was the self-defense against a future threat. But that does bode well for the broader market. And I think you're starting to see that come back in through our lovable IWM index, S&P 500, Bitcoin, right? Most things are green today except for GameStop. But we'll get into that in just 1 second. IWM shows a beautiful green day, although low volume, closes above the 9-day EMA for the first time since the beginning of the month. And that's a huge thing. That's a good step in the right direction if you're a bull, right? After a pretty huge bounce off of the 200-day EMA, which comes once in a blue moon, traders. This is one of the textbook areas of support and resistance. As you can see, going all the way back to this golden cross, you've only tapped it once, but this is actually your golly, I didn't even notice. This is your first touch of the 200-day EMA ever since the golden cross. That came close, but yeah, that's very interesting. And typically this will rip absolute craziness after doing so. So I'm interested to see what kind of volume can trickle in here. And hopefully you don't see a death cross, right? If you come back up to this 50 and then reject, it is much more likely that you establish a new trend, working your way down until you either fill this gap or find some kind of other trend direction, right? It is promising to see the daily MACD begin to curl up and hopefully cross green for the first time since January when you saw this overall mark up. So that's our coverage today on IWM. I wanted to spend most of the time talking about GME. GameStop, guys, had one of its best earnings in its entire company history. We're going to go over that in just 1 second, right? You look at the actual earnings per share, 49 cents per share over an estimated 31 cents, guys. That is huge, right? When you're talking about short percentage being at 15 to 16%, we know that's just a number because it's self-reported, but when you talk about very, very good fundamental news, this is what is hopefully going to change the game on GME and help pull up AMC with it, right? That's been part of the thesis that we've had here on this channel for quite some time, is that GME is going to work to pull AMC right back up from the dumps. So when you look at the chart on GameStop, you can see a couple different things, right? What you see is a basing on this $22 or $23 level and showing some strength outside of this falling wedge. You could see here on the RSI, you failed to hold the RSI band, but now we're getting a second opportunity to cross back above. Just in case you guys aren't aware, we watch this very closely because every single time you cross above and knife below, typically you see a pretty good size move off of this intersection, right? You see a cross back above here. Right on the RSI, it's that yellow band. You cross above it, you mark the bottom, you ran 30%. You cross below it here and you ran 10% down. You're now about to cross back above it and the 50 line, which could give you, right, another 30% to our profit target of this $28 to $30 gap fill. Now, once you get there, traders, there's going to be a point in time in which we're watching for a little bit of confirmation. If you're able to close above 28 and consistently retest it successfully, right? You look at the past closings above 28. You retested it once and sprang off of it. But this retest, right, you blasted above it because every single time you get above this level, traders, on this stock, things get crazy, right? The volatility ramps up, retail gets FOMO'd, and then you see this thing absolutely rug pull. And you see it every single time. Now, if you are able to successfully close above this thing with some strength, some volume, and honestly, some indicators showing bullishness here, I am in the belief that you're going to come back up here and you're going to make a higher high from this high and hopefully tap between 40 and 50 bucks. Now, once you do that, traders, it's going to be a significant test, significant test up here in this new established trend line from the 2021 squeeze, 2024 squeeze. You also have resistance here. So wherever you tap this trend line, I do expect a little bit of rejection before cruising north. Who knows when that's going to happen, right? I do believe it will at some point, but our all-time gap fill sitting at $73 is our thesis, right? And this happened on the daily time frame back in 2020 during your initial squeeze or your June squeeze, right? You see it right here circled in neon blue. So that is our profit targets on GME. It is a matter of time, in my opinion, not if, but when this thing decides to absolutely rip. Now let's go over. Let's do that. Let's go over the earnings here because I want to make sure you guys are not cheapskated. I wanted to take some time to just go over the numbers, right? Because I think the numbers tell a really good story here of the technical turnaround for this company. So I said, tell me about the GameStop earnings report, bullish or bearish. She said, Grok, mind you, pretty much comments about net sales being down year over year, but gross profit, which is important, right? This is the most important metric when you're talking business most of the time. Gross profit being up 35%. Thanks to better product mix and cost management. Operating income up, net income slightly down, which is due to stores being closed, underperforming stores. That's a key metric. Underperforming stores being closed with revenue slightly down. The fact that it's close off of how many stores they've closed is actually kind of impressive. Adjusted net income, digital losses, EPS being up because of your overall profitability coming in crazy high, right? No. Stock closed down, bullish takeaways. EPS beat on adjusted basis with profitability improving despite lower revenue, a sign of operational efficiency and cost discipline, lower SGAs, and better gross margins. Massive cash hoard. This is where it gets exciting, guys. $9 billion of cash gives Ryan Cohen and team enormous flexibility for potential acquisitions, investments, and share repurchases of other strategic moves. This often cited as dry powder for real pivot or transformation. That is where this play gets exciting because if you see a high shorted stock with high cash on hand, high profitability, and the last 7, not 1, not 2, not 3, the last 7 earnings beats, guys, that is tremendous. That's huge, right? And so when you look at the freaking growth that this stock has had over the years, it is just impressive. It is impressive that you are still at the same horizontal trend line that you have been at over the last freaking 4 years, right? Just zoom out and take a moment to look at the fact that you are at the exact same dollar amount that you were back in January of 2022. Now, if I had to ask you guys, all of you silly chickens, do you think we're at the same point in the company's revival that we were in 2022? It's an obvious freaking answer, guys. No, we are so much further ahead right now than we were back then, but it is not inflected on the stock's price today. And I think that's where the opportunity comes in, right? Shifted towards higher margin collectibles, which grew percentage of sales. Strong full-year turnaround from operating losses to solid profits. Bearish takeaways, revenue miss. That's pretty much all you could say, right? When you look at the revenue miss and lack of catalysts, right? Broader risks, competition from Amazon, yada, yada, yada. But who isn't feeling that? I think the bigger thing is just the revenue miss, which will turn around, I assume, with whatever they decide to invest. Overall, the report showed a profitable, cash-rich company with efficiency gains, but proceeded to see top-line weakness. Now, I asked, what is this GME's best ever earnings? It went ahead to say, basically, no, but the best ever earnings in the new era, right? When you talk about GameStop, moving from the brick and mortar company to what it is today, it is such a different company. It is a new era company. You are changing the story that is being written on this stock. And post 2021 meme turnaround, yes, strongest profitability, biggest cash generation, and clearest evidence of operational efficiency under Ryan Cohen. The real standout this time isn't the earnings itself, but the $9 billion cash pile, which dwarfs anything prior and gives massive strategic optionality. So bulls will call this a foundational, most profitable modern year with dry powder. Bears will point to ongoing revenue decline. So that is what we're watching for. We're really waiting, traders. We are really just waiting in the shadows for some clarity and some direction strategically from Ryan Cohen on what is going to happen or transpire with this cash on hand. And that is what's exciting, traders, regardless of how long this thing takes. I am sitting in the shadows. I am waiting, accumulating, whatever you want to call it, on this stock because I do believe in the long-term projection or trajectory of this stock, right? So that has been the lovable GME story. We could just look at GME on the Webull chart really quick because I do want to clarify. I don't think you filled the gap yet. And after hours, you are not going to fill the gap. So we're going to see after open tomorrow if you do come down here to fill these gaps. Currently sitting in the mid 21s and low 21s. But as of right now, guys, you're showing some weakness on the chart itself. You need to find a bounce, right? It's very self-evident. So we're going to see tomorrow what happens with that. You saw some blips in price action, right? These crash candles from earnings that if it opened in this way, right, you would fill the gap, but also leave a gap. So kind of funny. Interesting stuff. We'll cover AMC really quick because AMC did absolutely nothing today. Unfortunately, you have done a big fat nothing burger on the day. You did kind of come up and reject the daily RSI band here. You can see you bumped your head there. And you closed red on the day. If I go to the 4-hour. 4-hour, you have a doji. Still kind of just consolidating at the $1 price target. I'd like to see volume and strength push this thing up so that you do not even take the opportunity to flirt with going beneath the dollar. Nobody wants that. Nobody wants that. But the bigger story here is these arrows, right? We've talked about this multiple times, and I posted on Twitter yesterday. What you're doing with these arrows, you're identifying the lowest times in AMC stock's history on the oversold territory, right? On the RSI in the weekly time frame. You can look at these moves that transpired, right? August 17th or August 14th of 2017, you saw a 75% run. The other time you were this oversold, March of 2020, you saw a 200 or 300% run, and then you're here, right? And then you're now. So you need to see something happen, and you happen soon because this thing is so oversold. It's insane. That's my coverage. You are creating a pretty disgusting Dragonfly Doji on the weekly. So we'll see what transpires, right? Hopefully looking for a better close than this, but that's the close today. And you're still curling up on both the MACD and the weekly RSI. So that's what you got on AMC. On the GME warrants, because I promised I would do this for my man, not just Kyle Jones. Kyle Jones, I love you, but also for Only in Paradise, one of the most loyal subscribers I have. on the GME warrants, we'll just go to the daily time frame. You've done a couple things, right? You're continuing to ride the 9-day EMA, whether it be up or down. In this instance, the last couple weeks it's been down, rejecting it, and then also falling beneath the 50-day EMA. This to me speaks bearish sentiment, and it does also speak that you're going to at least touch this recent horizontal trend line. Now, there's not a whole lot to gauge here from the GME warrants, but what you can do is use these horizontal trend lines as necklines and support lines. This is your most recent historical support. So I do anticipate the GME warrants to come down to this $378 dollar territory before finding any kind of bounce. Beyond that, guys, you have a couple different areas to watch to the downside. The first one being this uptrend that you found a nice size launch of every single time. Now, I've reiterated this a couple times, but your gains are diminishing every single time. 57. And then this one was much larger, 76. So the rallies are getting shorter, and the pullbacks are getting a little bit more drawn out each and every single time. What that is doing is creating this rising wedge that I do expect to play out. Unfortunately, once you get up here, right, I do expect one more rally before you either see a dump and a rejection, or you play all the way into it. Whether or not that's a good or bad thing, we're going to have to find out, because these things can break up or down. But if I were to type in rising wedge into just Google, right, and then press images, typically what will come up is your, this is like your typical rising wedge formation, right? You will see that's a bear flag. Give me a rising wedge. Come on. That's a rising wedge. Okay. You boom up, and then you have this trading within a channel in which the frequencies are getting shorter and shorter and shorter. Your typical move from this is a breakdown and then a technical target for that would be the first pull down in the rising wedge. So you would take that and you would put that from the breakdown wherever it happens, right? That breakdown, let's say it happens back here, would take you right around 268 to make some kind of double bottom pullback. Now, who even knows what the frick is going to happen by this point in time, right? Because you're going to be 2026. GameStop might be flying through the moon in valuation. And I do genuinely believe the best is yet to come for GameStop. So whether or not this formation plays out, we're going to have to wait and see. I don't like that you have the 9-day EMA about to cross through the 50. That shows me that the short-term trend is a little bit more bearish than the long-term, right? When you go to the weekly time frame, you are closing beneath your weekly 9-day EMA. Granted, your volume is piss poor, so watch for that, right? Watch for the volume to step in here with the GME earnings being over and some kind of catalyst to pop through. The volume exhaustion here is actually like no other. You could see 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row in which you're seeing diminishing volume. This could be a very good thing if you find a hard launch bounce off of this horizontal neckline in which you've bounced once, 2, 3, 4 times already from. So that's technical analysis for the day. God bless each and every single one of you guys. Slap the subscribe button, do all the things that the algorithm likes, right? Try to be a people pleaser for the algorithm. Make sure to put on the notification bells, right? Because you'll see every time I post every single day. And have a wonderful rest of your day, guys. Much love and peace. Whoo. Buy merch.